Good afternoon. My name is Carl Anderson, and I am a state representative from South Carolina and vice chair of the NCOIL Articles and of Organizations and Bylaws Revision Committee. I'm going to be serving as acting chair for this committee meeting today. I'll begin with asking for a motion to waive the quorum requirement.
Seconded.
Properly moved in second. Let us all vote. All in favor say aye.
Aye.
Those who oppose the vote nay. The ayes have it, and so it's ordered. Now I'm going to ask for a motion of the adoption of the March 4th, 2022 meeting, which was held in Las Vegas, Nevada, and the June 3rd, 2022 committee meeting, which was held by Zoom. So I'm going to ask for a motion. Second. It's properly moved in second. All in favor say aye. Those who oppose will vote nay. The ayes have it, and so it's ordered. Well, continued discussion on the NCOIL Paid Family Medical Leave Model Act. We'll start today with a continued discussion on the NCOIL Paid Family Medical Leave Model Act. We've been discussing this issue for consecutive meetings, and since our last meeting in Las Vegas, the model language that was originally introduced by the American Council of Life Insurances is now being sponsored by Senator Paul Utke of Minnesota and Representative Deborah Ferguson of Arkansas, the NCOIL secretary. That language appears in your binders on page 220. I know that Senator Utke couldn't be here with us today, but Representative Ferguson is here. Representative Ferguson, would you like to say a few words before we get started?
I would. Thank you. Thank you, Mr. Chairman. This model, it establishes paid family leave as a class of insurance and would authorize states' insurance departments to receive and approve paid family leave policies in your state. It authorizes insurers who are licensed to transact life insurance or disability insurance business in the state to issue policies covering paid family leave. And this would empower employers to be able to give paid family leave to their employees. And I'll reserve any further statements until Karen and Molly do their presentation. Thank you.
Thank you, Representative Ferguson. Let's get started. With us here today are Ms. Karen Melchert, Regional VP, State Relations at the ACLI, and Ms. Molly Weston Williamson, Senior Fellow at the Center for American Progress. Please go ahead, Ms. Karen.
Thank you, Mr. Chairman, and thank you, ladies and gentlemen, for joining us on this lovely, beautiful July afternoon in New York and New Jersey. I would especially like to thank Representative Ferguson for stepping in for Senator Utke and for also being my co-sponsor on this important piece of legislation. As Mr. Anderson pointed out, we have discussed this at length at several NCOIL meetings, and we have finally brought this to you in a formally introduced NCOIL model. It is, as Representative Ferguson pointed out, giving authorization to insurance companies to file products that would provide paid family leave to employers. This can be used in states that have mandatory paid family leave requirements for their employers, and it can be used in states that don't have the paid family leave requirement, but that employers want to offer as an enhanced benefit to their employees, as we see an ever increasingly competitive employment market. So I'm happy to answer any questions, but this is an authorization for us to file products in your states. Currently, we cannot do that. So this would give us that opportunity, and it is designed so you can either create it just as a authorization statute and then have as a regulation the standards that would go into that policy, or you can put the entirety of it into your statute when you propose it. It has been adopted in Virginia. That was our test case this year. They enacted it earlier this year with the authorization language, and they are now working on the promulgation of regulations. It was also passed out of the Senate in Minnesota, but failed to advance in the House before the end of this session. So we appreciate your support. Happy to answer any questions, but we look forward to this being adopted as an NCOIL model that you can all take back to your states when this issue comes up and there is a private option to address the need. So thank you very much, and I'm happy to answer any questions.
Do anyone have any questions? Oh, yes, sir.
I'm Dennis Paul, a representative from Texas. Since these guys in Virginia, I guess it's pretty new, you said they just did it. So you have no idea what their premiums would be?
You know what, I asked that question earlier, and no, we do not. But they would be similar to a disability income type of policy.
Like a short-term disability that they might already have?
Short-term and long-term, but more in line with short-term since it is limited to 12 weeks.
Right, and is there, most of these, are they planning to do it where it would be the employee paid the company back, or is it just companies have decided how they're going to do?
Well, I would say in a state where it's mandated by law that an employer provide paid family leave, then the employer would pick up the cost of the
And
premium.
the ones that don't, they would pass it on to the...
Well, it would be up to the individual employer and how much they wanted to split with their employees and whether or not they wanted their employees wanted to take it.
All right, thank you.
Okay, we're going to hold off on the other questions until Ms. Molly gets through. So if you have a question, just write it down so we'll be ready. Come on, Ms. Molly.
Thank you so much. Thank you for having me. Thank you to our acting chair, and thank you to everyone for this really timely and important discussion. I think I come from the Center for American Progress. Before that, until actually this week, I was director of paid leave and future of work at a better balance. And so I've been working in that capacity on paid leave policy at the state level for nearly a decade. And I think because of that, I have a slightly different perspective on what might be a way to complement this approach of pure authorization. So as I think you know from your many past discussions, as of 2022, 11 states in the District of Columbia have laws on the books guaranteeing workers the right to paid family leave and with it paid medical leave benefits. And of those 12 laws, all but 2 have a meaningful structural role for commercial insurance. So I think commercial insurance is already part of the solution in most of the states that have moved more aggressively, and I think there's an opportunity to build on that legacy. I think here, as we think about different approaches that could potentially work together, what I'd call your attention to is that when we look at those states that have established laws, particularly when we date back to their history, for many of them rooted in historical temporary disability insurance laws, we've got years and years of experience, and in some cases we're talking about decades of experience in this kind of model. So in a model where you have a guaranteed right for workers and flexibility for employers in how they meet that obligation, which typically does include commercial insurance. So given the hour, I'm going to keep my remarks brief, but I would just suggest that I think there's an opportunity to consider going further or complementing a move that's focused on the authorization to think about if there's an opportunity, and I think particularly an opportunity with a focus on what we want the insurance market to look like, to think about whether we can go further and instead of just authorizing the sale of a product, or in addition to that, also providing a right to the product. So I think in some ways we're thinking sort of flipping to the way we think about something like workers' compensation insurance, where we have an insurance marketplace that operates in a context of some guaranteed rights. I think to thinking about examples like Virginia, I think we're all looking to see what happens. My understanding is I think the law went into effect on the 1st of this month. So really, truly, it is not a criticism to say we just don't know yet what's going to happen there. But I think we have some reason to think about what might occur. I think short-term disability is a really good analogy here. So when we're thinking about, speaking to all of you as lawmakers, how do you meet the needs of constituents? Short-term disability is an established product in every state in the country. But what we know from the Bureau of Labor Statistics is that only about 40% of the civilian employee workforce currently has access to short-term disability insurance. When you look at lower income workers, that gets cut in half. So I think when we think about moving into paid family leave coverage and these benefits that I know you've already been through ad nauseum, all the reasons why they're so important, I think thinking about are there ways to complement the availability of commercial products with some built-in rights in states that are interested in moving in that way to ensure that everybody has access to these benefits that I know you already know all the reasons are so important. Again, thank you so much for this timely and valuable conversation, and I'm really looking forward to being helpful in any way I can moving it forward.
Okay, thank both of y'all so much. Now we're ready for questions, and we shall first hear from the Senator of Wisconsin.
Well, thank you. I think it's pretty much been answered. So this is
Turn your mic on.
It is. It is. So this has pretty much been answered. So you're looking at this, it would be employer purchase it, whether he pays for it is going to be optional, almost like an AFLAC type coverage. I can do the general short-term disability. I can take paid family leave. I can take other maybe coverages. Maybe there's like a term policy at 2 times my wages. This would just be a complement to those other type coverages, or it could stand alone.
It's intended to stand alone, and it could be mixed in with all of those, but it is intended to address specifically the paid family leave. The other accepted benefits or the supplemental benefits that you refer to, not every employer offers that, and most employers don't offer that when they pay for it, but this could be something that an employer may choose to pay for themselves because they want to add that benefit to attract more employees. And then, as I said earlier, in the states where it's mandated, the employer would have to offer it and they would have to pay for it. But it's really designed so that it can be used by employers in whichever way they need to use it, either as a selected benefit or as a mandated benefit.
Okay, thank you.
Do we have any other questions? Wow, y'all must have did a good job. Representative Ferguson, would you like to make any closing remarks?
Yeah, just like I said before, I'm not a fan of mandates. This doesn't mandate that you have a paid family leave. It's just a private-public partnership avenue to do that.
Thank you, everyone. Hopefully we'll be able to work on this model and get it to the point where it can be adopted at our November meeting. Thank you, ladies. Next, consideration of resolution identifying certain enhanced cash surrender value endorsements as violating the standard non-forfeiture law. Okay. Our next topic is the consideration. The prime sponsor of the resolution, Indiana Senator Travis Holdman, unfortunately couldn't be here with us today, but the resolution's co-sponsor, Texas Representative Tom Oliverson, NCOIL Treasure's here. Rep, would you like to say a few words?
Sure thing. Thank you, Mr. Chairman. Just making a couple of remarks on this. It was an issue that obviously Senator Holdman kind of brought to my attention, and he is the prime sponsor. But after listening to the conversation around it, I became very interested and decided to sign on. And I'm going to let Commissioner Chapeau talk specifically about this and kind of give you the nuts and bolts. But I would just say that it centers around the idea that these enhanced cash surrender value issues are a violation of statutory law as well as a deviation from what I think all of our states have adopted as the standard non-forfeiture law. So I'll let him sort of speak in great detail about that and go through the nitty-gritty. I know that we had a productive interim meeting last month during which the issue that you're going to hear about today was reflected in the or there was, I guess, an issue that was reflected on the second page of the resolution. It says that the provision of the resolution notes that there are 2 similar types of products, but only one of which is the target of this resolution. The wholly different product, never asserted to be in violation of the insurance code and thus not objectionable to NCOIL, has the same enhanced cash surrender value name and is a common rider offered and policy issuance, but doesn't consist of this limited time spiked offer to terminate the policy. Instead, it's a product designed to support the persistence rather than the termination of corporate-owned policies due to tax benefits of treating the surrender value as an asset accordingly. That's why the title of the resolution includes words such as certain types, and we're not calling for a blanket prohibition with this resolution. And I'm going to stop there, Mr. Chairman, and just very proud to sponsor this with my good friend, Senator Holman.
Certainly want to thank the co-sponsor from Texas. And now we will hear from the director.
Thank you, Mr. Chairman. Appreciate the introduction and the opportunity to speak. As noted, Senator Holman isn't here, so when I was trying to figure out what to say, I thought I'd try to channel him, my remarks. And in trying to look at the issue through the Senator Holman prism, a phrase popped into my head, and that's statutory regulation. When I was a regulator, and when I started 23 years ago, I used to hear that phrase a lot. Kind of the old timers used it. Statutory regulation performed by statutory regulators, which means that under the rule of law, the federal and state constitutions invest policy-making power in their legislative branches to be enforced by the executive. An executive branch agency, like an insurance department, is a creature of statute. It exists because it's authorized by the legislature and the insurance code for the specific purpose of enforcing the insurance code requirements written by lawmakers. Thus, it's sometimes referred to as a code agency. Thus, these traditional terms, statutory regulation, statutory regulator. The issue today is about these short-term, limited-time spiked cash surrender value offers where the cash surrender value is double, tripled, often even more for a short offer period of a couple months. The law on that is that in the 80s, each legislature passed an amendment to the standard non-forfeiture law at the NEIC's request in a model, adding a new standard in addition to standard non-forfeiture minimum values, generally known as a smoothness requirement. So the standard non-forfeiture law has certain minimum values that have to be met, and it has a smoothness requirement. The drafters described it as requiring, quote, a reasonably orderly sequence of increases in cash surrender value and prohibiting, quote, sharp jumps in cash surrender value. Actuarial groups at the time further explained that it prohibits, quote, benefits discontinuous in nature or benefits available only, quote, during certain windows of time. There isn't any dispute that the products that you've been studying since last year violate those descriptions, and in fact, it would be hard to design a product more non-compliant. The only argument I've offered instead is that the rule doesn't apply, the smoothness requirement doesn't apply to universal life. But as I discussed at length in my testimony last month, statutory regulation says that isn't so. The section of the standard non-forfeiture law that contains the smoothness requirement applies on its face to, quote, all policies, unquote. And the enumerated exemptions and the, quote, exceptions, unquote, section in the law do not include universal life. Furthermore, the same amendments to the standard non-forfeiture law that created the smoothness requirement did authorize rulemaking for universal life pertaining to standard non-forfeiture law minimum requirements, but did not authorize tinkering with standard non-forfeiture law standards for the smoothness requirement. And the universal life model regulation, consistent with that limited statutory authorization, only tinkered with standard non-forfeiture law standards for minimum cash surrender values. I'll spare you a recitation of case law regarding statutory construction, since I think that any legislator instinctively understands the Hornbook common law rule, which is that absent a specific statutory exemption, a statutory requirement is inviolate. That smoothness applies to universal life was understood when the universal life model was adopted. The American Academy of Actuaries explained with respect to universal life and smoothness, quote, what we believe to be obvious, universal life should comply with Section 8 of the Standard Non-Forfeiture Law regarding smooth cash values. It should not be necessary to add this requirement to the model regulation. The requirement already exists. So that's the law. Quickly on consumer protection, since the purpose of the law is consumer protection. To give an example, if you have identical risks, they buy the same policy on the same day. They pay the same premiums for years. One surrenders on Monday for the policy's stated cash surrender value of $50,000. The other identical risk doesn't, and then on Tuesday morning gets an offer in the mail for $250,000, the enhanced offer, and takes it. So you've got the second consumer has gotten 5 times the benefit for the same price on the same policy. Unfairly so, to the detriment of the first consumer, who got 1/5 the benefits for the same price. And perhaps even worse, the first consumer who surrendered for $50,000 did so based on an illustration of future benefits that didn't include the $250,000. That's an amount the carrier, the way these are structured, would have known for probably as much as a year was going to be offered to risks like her shortly after the illustration was issued. So that the consumer gets an illustration trying to decide what they're going to do. They see the cash surrender value at a number that they're not liking for the next year. They say, I'll just take the $50,000 and terminate the policy, not knowing what the insurer knows and what the insurer didn't tell them, that they were going to get an enhanced offer. That's quite misleading. It's quite harmful, and you can't put that toothpaste back in the tube as long as these products are allowed. We think that statutory regulation through enforcement of the standard non-forfeiture loss smoothness requirement is appropriate and necessary. We believe your draft resolution captures that nicely. We thank Senator Holman and absentia for his thoughtful consideration and persistence, just as we thank Dr. Oliverson for engaging on this issue and presenting it here. Thank you, Mr. Chair.
Thank you very much, Mr. Director. And I like that statement you made.
Which one?
You cannot put that toothpaste back in the tube. I'm from the South. I'm going to use that. All right. Do we have any questions or comments? Hearing none. Now we need a motion to adopt the resolution. So move. We got a motion? Got a second? All in favor say aye. Those who oppose the vote nay. The ayes have it, and so it's ordered. Thank you very kindly, Mr. Director.
Thank you, Mr. Chair. I'll brush and floss in your honor before I go out tonight.
You got to give me that one too. Write that one down for me now. All right, next, consideration of resolution in support of the position statement recognizing congressional consent to the Interstate Insurance Product Regulation Compact, the IIPRC. IPRC, yeah. Mr. Tom got jokes over here, y'all. Okay, ladies and gentlemen, if you would turn to page 226 in your binder, and the position statement, it follows the resolution on page 229. The resolution is sponsored by the representative from Indiana, Representative Matt Lehman, NCOIL immediate past president, and Representative Ferguson. So I'll turn things over to Representative Lehman, who's the chair of this legislative committee.
Thank you, Mr. Chair. And I'm proud to serve as the legislative chair on the IIPRC committee. And thank you, Representative Ferguson, for co-sponsoring this with me. So what this is just for the sake of just some, if you don't know, if you're new, the Insurance Compact was created to allow transparency or to create uniform standards across state lines for life products, disability products, long-term care products, and annuities. The benefit of that has been that a company can take to market a product, have it approved by the compact, and begin utilizing that in all their states. It's actually been beneficial to the states. There's a fee charged to that. There's money that comes back to the state when they do that. We've been an early supporter of NCOIL, or NCOIL has been an early supporter of the compact when it started. We want to continue that, and I'll let Karen Melcher, who is the kind of the head of the IIPRC, and Commissioner Brain to talk a little bit more in detail about why we're here with this resolution. But I just want to point out that as a strong supporter of the compact, we need to make sure we move forward with this, and they can go into the details as to what's happened and why we're here based on the Colorado Supreme Court decision. But as Chair Anderson noted, it is in your binder. I think on page 299 is actually or 229 begins the actual the compact data as to why they feel it's constitutional. There's some federal behind that. So I'll stop talking and turn it over to Karen and let her kind of go into more detail as to why we're here and why this is vitally important.
Thank you, sir. Now we have Karen, number one, and then we have the Maryland Commissioner, Ms. Kathleen, and then we have Karen, number two. So, which one of you, will the real Karen please stand? We got to have a little sense of humor. It's in the evening, y'all. Now, which one of y'all going to speak first?
So I'm just going to say briefly that I am completely superfluous here at the moment, although I'm happy to answer any of your questions. But I'm Kathleen Bahrain. I'm the Maryland Commissioner. I have the honor of serving as the chair of the compact this year. I think Representative Lehman has done a great job of setting up the issue, so I'm not going to elaborate on that. I'm going to ask Karen to really give a little bit more detail about what the circumstances that led to this resolution and the need for it.
And I want to thank Commissioner Bahrain. Really honored that she's here today with us. I think that demonstrates the importance of this resolution and the compact on both a regulatory and a legislative platform, or how important it is to both bodies in our states. Commissioner Bahrain does chair our commission, or the Insurance Compact, the IIPRC, and I just want to thank her and the legislators around this table that did attend. We had a compact roundtable here in New York City the day before the NCOIL meeting, and really great attendance. I think we saw the importance of the compact, not only to our states, but also to the industry that you regulate. I have been coming to your meetings, briefing you on this lawsuit that came, or a ruling that came down just as the pandemic was starting. And it came out of the Colorado Supreme Court. They actually looked at it on a certification. So they looked at it in a way that it wasn't them ruling on the actual case itself, just on an issue about this compact. And what they found is they looked at it, and they looked at it under the prism of federalism, and said without congressional consent, its General Assembly could not delegate the power to approve an insurance policy that was sold in Colorado under a standard that may differ from a Colorado law. And so that really then called us into looking at that. The commission, under the leadership of Commissioner Bahrain and others, we did an independent governance review, hired the law firm of Squire Patton Boggs to look at this, do a litigation analysis. And what they found is that really court or legislatures, you can agree. You can come together and you can agree really upon anything. You are legislators. And while they looked at that and thought, well, again, they put aside whether Colorado was the Supreme Court was right in their reasoning. What they looked at and they said is, you actually have a form of congressional consent. Congress actually looked at this and gave the thumbs up to this compact back in 2006 before it was operational. And they did that by way of their role in the district with the District of Columbia. If you're familiar with how that works, they actually are the ones that approved the legislation for D.C. And they did issue a federal law signed by George Bush at the time, President Bush, that said that D.C. could join this compact and all the powers in the compact delegated to D.C. And so that is actually a form of congressional consent. It's called implied congressional consent. And what that does is it elevates the standards so that they apply as your state's laws for compact-approved products, which is the very essence and purpose of the compact legislation that you all have put in place. So this position statement was something that has taken 2 years to develop through the deliberations of our governance committee. Our members working with our legislators. Representative Lehman, when we took this to them, they said, this is great that you're doing this, but we'd like to also see an outside counsel opinion from your firm with regards to this opinion. And so we got that back in March. It's in your materials as well. Our outside firm said this position statement is well-reasoned, well-documented, and we encourage the body of compacting states to adopt it, put it on record. So if there's another case that comes along, the courts will have the benefit of seeing the position of the compacting states with regards to the compact, that yes, you understood, you want to come in and agree with your states, that you can use this tool to come together and collaborate in a uniform and standard way that streamlines product approval and helps these life insurance products compete with federally regulated securities and banking products. So this is all good. I could give you a lot of statistics. I won't bore you with that. You'll hear from the industry on how impactful it is, but as you'll hear from Representative Lehman, because he hears this too, the compact has become an integrated part of the product approval process across our states. And our legislators, you have the final touch points with enacting the compact and many other safeguards. I'd be happy to answer any specific questions about the statement. And again, thank you for your support.
Okay, we heard from Karen S. Now we're going to hear from Karen M.
Good afternoon, Mr. Chairman. Thank you again for having me this afternoon. I really just want to say basically ditto. We as the life insurance industry worked hard to get this compact established and adopted across most of the states. And the Colorado decision put a chink in that armor, and we need to strengthen that. And it's a very important tool for us to be able to bring products to the market more efficiently and quickly, and that is to the benefit of consumers. It goes through a regulatory review process. We're not cutting any corners. We're just making it more streamlined, and we truly appreciate the support of this organization for the compact, for Commissioner Brain's leadership, and for continued support with the adoption of this resolution. So thank you very much.
Thank both of you, Karens, and thank you, Madam Director, for sitting in the middle and keeping them together. Now the co-sponsor, Representative Ferguson. Do you have any comments?
Yeah, I support the position statement, and I certainly agree with everything Representative Lehman said. Not only does this streamline everything, but if you haven't asked, one of the most valuable things I got as a member of the Legislative Compact Committee, they have a sheet that tells you how much it's saving your state. And I thought that was very informative. You might, if you want to ask for that. For Arkansas, I think just the administrative savings for us was about $1.3 million. So it saves the state money, but it also is a valuable tool to streamline things for insurance companies.
Thank you very much. So now we shall ask for a motion to adopt the resolution.
Can I make that motion? But first,
yes, sir.
Representative Ferguson said she agreed with everything I said, but I called Karen by her wrong name. And so I retract that, and it is Karen Shutter, and I apologize for that, Karen. So now you can agree with everything I've said. With that, I'll make a motion to adopt the resolution.
A second.
All right, we have a motion and a second. All in favor, say aye. Those who oppose, vote nay. The ayes have it, and so it's ordered. Thank you, ladies. Next, consideration of resolution regarding recruitment, retention, and diversity within the life insurance agent profession. That resolution appears in your binders on page 245. I'll turn things over to the sponsor of the resolution, New York Assemblywoman Pam Hunter.
Thank you, Mr. Chair. I'm very proud to sponsor this resolution as it deals with a very important and timely topic. Last November at our meeting in Scottsdale, we heard a presentation on regulatory obstacles to the recruitment and retention of insurance producers, and it really did generate a lot of interest and discussion among committee members and interested persons alike. This resolution is important because the recruitment and retention numbers for life insurance and financial planning agents are really startling. As the resolution notes, only 14 of every 100 new recruits remain with their hiring company after their very first 4 years of employment. That's not a sustainable number. I know in my area alone, it's been very, very difficult, and 4 years is actually very high. It's much, much less. Furthermore, the life insurance and financial planning industry is experiencing a growing need for professionals who serve our BIPOC communities and who come from those communities, as well as the need for greater gender diversity in all communities. I certainly think putting NCOIL on record as working to rectify those problems is something worth doing, which is why I am proud to sponsor this resolution. Things such as mentorship programs, expanding the life insurance and financial planning market in underserved communities, continued education requirements, and online licensure examinations are all things NCOIL should be examining in order to make sure there aren't any statutory impediments to licensure and inhibit the ability to recruit and retain a diverse and qualified group of financial professionals. So lastly, it's important that NIAC also work on these issues from the regulatory perspective. If NCOIL and NIAC can work together on this, with NCOIL handling statutory issues and NIAC handling regulatory issues, this will definitely be a win-win. So thank you very much, Mr. Chairman, for letting me speak and introduce this resolution.
Thank you, Assemblywoman Hunter. We'll now hear from Ms. Melissa, who will state her name and who she represents.
Thank you, Mr. Chair. My name is Melissa Bova. I'm the Vice President of State Affairs at FinSECA. I have a very brief presentation because I know this is the last thing on the agenda, so we're keeping you from your next meeting or a cocktail. So I'm going to be quick and efficient, but wanted to provide a little bit of background. When we presented, one, I want to thank Assemblywoman Hunter for sponsoring this resolution for us today. And I do want to give a shout out to Representative Thomas from Pennsylvania because when I was here in November, I was on my second day on the job with FinSECA and came from Pennsylvania. So just want to give a shout out to my last 15 years of experience was all with the Pennsylvania legislature. So I wanted to say hello to her. But as background, quickly, we just wanted to go through who FinSECA is because we are relatively new compared to many of the other trades that are in the room with us today. FinSECA was formed in September of 2020 and was formerly kind of a formation of AALU and Gamma. So they came together in 2020. Since then, we've been really pleased to bring Forum for 100 under the umbrella of FinSECA, and just recently, NAILBA, the brokerage community, voted to join FinSECA as well. So FinSECA stands for Financial Security for All, and we're really looking to work, one, reunify the profession, and also work with great partners who are up here with me today, like NAIFA and ACLI, on furthering some of the initiatives that we're going to be discussing in a few minutes. So with that, just so you know, this is what Financial Security for All stands for. FinSECA and ALU never did state advocacy before. I am our first VP of State Affairs, so I'm learning so much, like I said, from everybody in the room because I've been doing this job for just 8 months, but really excited to be here today and further this initiative. I'm going to give you way too many stats, so hopefully the presentation will be sent out afterwards. But this is really the financial problem we're facing, a $12 trillion life insurance coverage gap. 40% of Americans are either uninsured or underinsured. And during COVID, there was a 5% increase in life insurance sales compared to a loss of 3% before COVID. So COVID really exacerbated the need for financial security for all Americans. But what we're here to address today is the people problem. And there's 3 buckets that we really think are part of this. Professions next to getting older, lack of diversity, and a need to refocus on that recruitment and retention problem within the profession. And as Assemblywoman Hunter mentioned, this, we believe, is a collaboration between a regulatory fix and a legislative fix. So we think NCOIL is going to be a really big part of this solution. An aging profession. Over half the people in our profession, while they are great, they're over the age of 55, and they're starting to think about their business transition plan. So this is an item that we need to start thinking about now to plan for the future. Lack of diversity, I won't go through all of this, but this just really shows, I think, the need for life insurance and financial planning for the entire population. FinSECA does stand for financial security for all, and we believe we need to make steps to ensure that everybody can access the products, that holistic financial advice that we're able to provide. One of these items that we believe is creating an advisory council in states that will focus on diversifying the profession. Recruitment. These are for any of my commissioner friends that are in the room. Some of these are really easy NAIC fixes. So take a look at this. And as I said, this is a collaboration between FinSECA, NAIFA, and ACLI. The three of us are working together on this, which I think just demonstrates how important these items are. And then, of course, retention. As Assemblywoman Hunter said, retention's at 14%. But there are companies that have retention at above 40%. So there is a solution to this, and we believe a solution that NCOIL could look at is a mentoring program, really creating a mentorship program that will help build up advisors, professionals in this industry, and give them the support they need to be successful. And to that end, I'd love for you to believe everything I say. But I have a few quotes up there that you might have trouble reading, so we'll send this out later, that just kind of really show the importance of how firms are starting to look at this. And this just really encourages people to make those investments, bring more people into the profession, grow the profession, and ensure that financial security for everybody. And that is my way too much information overview in support of the resolution today. And happy to take any questions, I think, when we're done.
Ooh, thank you, Ms. Melissa. Great presentation. And now we will hear from Ms. Megan, who shall introduce herself and her company.
Hello, Mr. Chairman, committee members. Thank you for the opportunity to speak today on this important issue. My name is Megan Gale. I serve as Public Policy Director for the National Association of Insurance and Financial Advisors, better known as NAIFA. Founded in 1890, NAIFA is one of the oldest and largest agent trade associations, representing over 20,000 insurance and financial professionals with 88 chapters across 53 U.S. states and territories. So I'm here to express our support for the proposed resolution regarding recruitment, retention, and diversity within the life insurance agent profession. I'm proud to join forces with my colleagues to eliminate obstacles for financial professionals in their work to serve the insurance industry advisory needs of Main Street Americans. We strongly believe that NAIFA's work through NCOIL and its partners bolsters our collective ability to bring more diversity into the financial services community, and we thank you for your consideration on this very important issue. I would tell you how critical the role of agents are in this industry, but I don't think I can express it with the same resonance as we heard from NAIC President Director Cameron today during our luncheon. The turnover rate and retention of all advisors, regardless of race, has long posed a challenge to the industry, and it will take our broad collaboration to address it. Many American communities are significantly underrepresented in the financial advisory business, particularly Black Americans. The reason for this lack of representation is complex and mainly results of factors that have been in place for many years. But many of the steps that we can take to encourage recruitment and retention will not only serve underrepresented groups, but the industry and our communities as a whole. Recruitment, retention, and diversity are threads deeply woven into the fabric of NAIFA's missions. A key component of ours is to serve as an industry expert on diversity and inclusion by attracting and nurturing members from diverse backgrounds and providing the resources to meet the needs of their markets. NAIFA has long held that membership is a powerful component of addressing agent recruitment and retention and promoting diversity, inclusion, and cultural competency. Many of NAIFA's core initiatives drive to this very purpose, including our Young Advisor Program, which works with college students and new advisors to educate them on different career paths available within the insurance and financial services industry. The Talent Development Center, Diversity, Equity, and Inclusion Council, and Advanced Practice Centers, all of which connect advisors at all stages of their careers to share valuable knowledge, training, and provide a pathway to mentorship that may not always be available within their organizations. Encouraging broader, more robust, and more structured mentorship programs that coordinate and complement existing continuing education requirements will provide a meaningful step forward. During these opening remarks of this very meeting, Assemblyman Cooley shared with us about his mentor, who was an independent insurance producer as well as a state legislator, and how that impacted his own career trajectory. This really highlights the tremendous value that mentors and mentorship can have on the success of insurance producers and beyond. There is more that can be done by committing to removing barriers to recruitment and enabling tools for retention and promoting diversity and inclusion. We look forward to continuing this work with both our colleagues here, NCOIL, and state regulators. But as legislators, and in the spirit of this resolution, there are some important things that you can consider within your states today. Currently, there are 27 states that still require mandatory pre-licensing education, despite pre-licensing mandates not producing agents better prepared to take the exam. Data from states without the mandate suggests that most candidates for licensing still take a course, buy materials, or otherwise prepare. They do not need to be told to study. But by removing the mandates, candidates can study in a way that fits preferred commitments of time, money, methods of study, even geographic location. These are all particularly important when we consider the varying needs of those who may be caregivers, considering insurance as a second career, or may come from non-traditional educational backgrounds. Another thing to consider is to re-examine criminal history look-back periods for non-financial and non-violent crimes, particularly Class E felonies. A great example of this was in Tennessee, House Bill 2225, which lessened the look-back for agent applications with Class E felonies to 10 years. Another thing to look at would be to support personal financial literacy course requirements in schools. There are currently only 14 states that have adopted these requirements. Beyond the obvious benefits of financial literacy, these courses are often the first introduction to financial services and planning. Further, providing young consumers with a solid foundation in these topic areas works to encourage greater trust in the industry and to better protect consumers. And finally, support of continuing education credits for association membership. This year, Illinois became the 13th state to offer continuing education credit for memberships in an agent association. As associations like NAFA, the Big I, FinSECA, and others continue to work to encourage recruitment, retention, and diversity in the industry, providing a pathway for these efforts to be eligible for continuing education credit not only provides members with due credit for their efforts, but encourages more participation, all while creating more skilled agents to better serve consumers. These are just a few suggestions, and we look forward to continuing this conversation in the future. Again, I would like to thank Senator Hunter for her sponsorship in this, and thank you for your time, consideration, and encourage your support for this resolution.
Okay, thank you, Ms. Megan. Now, do we... Oh, that's Ms. Karen M.
Yeah, Ms. Karen M. is back.
Oh, you back?
I'm back.
Okay.
I'll be very brief. Thank you, Mr. Chairman.
We shall hear from Ms. Karen M.
And I neglected to introduce myself the 3 other times I was up here. I am Karen Melchert with the American Council of Life Insurers, and I'm here to raise my hand in support of this resolution. 2 years ago, the ACLI created its Economic Empowerment and Racial Equity Initiative, and one of the pillars of that initiative is to broaden access and diversity in our supplier, our agent force. And this resolution goes further to that point. We've been working with the American College and working on financial literacy to increase the exposure of a career in insurance to a more diverse workforce, if you will. And I think one of the most important things in this resolution that we'd like to stress that's important to our membership is the ability to have online testing requirements. And we saw this in the pandemic when people were not able to take their tests in person. It was delaying. They'd taken all their education requirements to sit for the licensing exam, but because they were not open due to COVID restrictions, those requirements expired and they had to do more, and it was really not necessary that they be proctored in classroom setting. So we think that online course testing is appropriate and expansive and allows access to more people. In addition, there are limited in-person opportunities, and sometimes people had to drive 5, 6, 7 hours to get to the testing location. So we would encourage that part of the resolution to be something that you as state legislators can work with your departments of insurance and the requirements and make the necessary statutory changes. So we appreciate FinSECA and NAFA for bringing forward this resolution, and we stand in support, and we thank you all for your support as well.
Well, thank you, Ms. Karen M., for your statement and your support. Now, do we have any question or comments from any member of the panel? Okay. Senator McClellan.
Thank you, Mr. Chairman. Senator Michael McClendon, Vice Chair of Insurance Senate Committee in Mississippi. Can you repeat the part about you want to do away with requiring the education before the test, or you want to lower the requirements for the education before the test?
I'd be happy to take that one. So there are currently 27 states that have done away with the pre-licensing education mandate. So it leaves, you still have to pass the exam, but it takes away the mandatory 20 hours or 40 hours, and it just allows candidates to prepare as they, best fits their budget, times, preferred study methods. And the data has shown that there is not a statistically different passage rate. Even pre-licensing education providers still report very similar numbers as far as, people are still out there purchasing it. But it is one less requirement that departments do have to track. And, while we're certainly don't need mandates where mandates don't serve a purpose there.
But with online courses, you don't think it's helpful if they have a required, say if it's 20 hours, but yet we still have 2 years to get a certain amount of hours continuing education?
Yes, so we consider continuing education a separate type of education than we would pre-licensing education.
And that would be for all companies?
For licenses, not necessarily companies.
Right. Thank you.
Representative Lampton.
Thank you, Chair. Thank you for a presentation. I'm a 30-year plus NAFA member. My question has to do with what are the traditional career carriers saying, the New York Lives, the Northwesterns, are they just not recruiting like they used to?
I mean, I think I can speak on the profession side for us. I mean, I think they are recruiting. I think things have changed. And as I think was eloquently said before, nobody, thinks I'm going to be a life insurance agent when I grow up. So I think what we're having right now is people are getting hired, but then they're just not getting the support that they need. So we're trying to find a way, how can we provide more of that support within the first 4 years when people are young and learning and just trying to sell product? How can we provide a more holistic support system for them when they might be in an office where they're the only young agent? So how can we do a broader support for them? So I think everybody's changing how they hire. I think if COVID taught us anything, it's changed how everybody's hiring. I think we're trying to think of a creative way to keep people in the profession and give them that support that they need in the first few years so they stay and are successful.
Okay, any other questions? Okay, come on.
Thank you, Mr. Chairman. Do you think that COVID had a big play in that because the mentors are at home instead of being at the office? I know I work for a company in Memphis, and there for a while there were 3 people in the office out of 145 employees, maybe. So we've had a requirement that producers be in the office for a certain amount of sales meetings in person for that very reason, for mentorship. And even in Memphis, it's hard to find, we're begging for diversity in our agency, and it's tough. And we talk to agents all over. Now, we've since been bought by a Fort Worth agency, and we've got agencies all over the world now. So it's, I don't know, how much do you think COVID had a play in this, other than, how much did COVID have a play in it?
Well, we have data. Actually, FinSec's current board chair, Ed Deutschlander, did a study of this in 2017, and the retention rates were the same. It was consistently 14%. So this was an issue. I don't think COVID helped it. I think COVID could cut both ways, as you weren't in the office, but then you had some people that liked the flexibility of remote work. But this has been a problem pre-COVID. So it goes back further than that. So I don't think it helped. But it is a bigger issue than just kind of the COVID remote work problem.
Okay, thank you for that information with your data. Any other questions? Okay, now we shall ask for a motion to adopt the resolution.
I'd like to make a motion to further this adoption of this resolution. Thank you.
We have a motion. Do we get a second?
Second.
All right. All in favor signify by saying aye. Those who oppose the vote nay. The ayes have it, and so it's ordered. Any other business? If not, enjoy your evening and see you 8 a.m. for breakfast.